All right, let's make sure this is working. All right, we are live. First video, baby. I'm definitely excited to get this up and going. It's been some time. I know we have talked about this for a while now on Twitter. First and foremost, I want to say I very much appreciate everyone who follows me on the platform. The day-to-day conversation, the constructive criticism, any ideas, opinions you guys have, feel absolutely free to talk about it below my posts. I know you guys have been waiting patiently for me to post a video. A couple of you have DM'd me and asked about it if I had a YouTube streaming service. Well, this is going to be the beginning of it. I wanted to just give you guys a quick introduction so you can understand my personal background, as opposed to some of the other guys that have Twitter accounts and post technical analysis on here. Firstly, want to say that the guys that do post analysis on here, there are some incredibly intelligent individuals on Twitter. I've learned a lot from them, things that I've never even learned working in corporate. But I really appreciate those guys, and I want to give you guys a different kind of perspective on the things that I see and why I see them. Yeah, so to give you guys a little bit about my background, out of college, I work for a foreign exchange currency broker. I managed a $75 billion book of trade flow with 40 different various banks, broker, and hedge fund clients alike. Mostly while I was there, I did account management and operations, just kind of learning the business, the fundamentals of how trading flow works from, one platform to the next, like, a front office trading platform to a middle office risk management platform, all the way to the back office where accounting, reporting, and clearing happens. I then moved to a trading technology vendor, also in the foreign exchange space. I did account management and sales here. I managed a $25 billion book of trade flow and did almost $2 million in new revenue. I then wanted to pivot my career into the fintech software sales space. I really wanted to diversify my background with different asset classes as opposed to just working with foreign exchange products. So I started working for a company called Calypso Technology. Calypso is a complete front to back office investment management enterprise software solution. We cover all asset classes: FX, equities, fixed income, commodities, etc. We also have collateral and margin modules as well, including treasury and risk management. We were purchased by Thoma Bravo, which is a large private equity firm on the street. They also purchased Axiom SL. Axiom SL is a bank regulatory reporting company. They merged Axiom and Calypso together, and now the company under the umbrella name is Adenza. I know you guys have seen me post about this before. We were just in Portugal for our conference, and I posted a few pictures from there. But that is what I'm currently doing. I started trading during the pandemic. The reason why I wanted to trade on my own is the software that I currently sell is majority based around derivatives. Any type of company on the buy and sell side, whether it's a pension fund, insurance firm, bank, broker, hedge fund, asset manager, all of these large institutional firms use derivatives in some way, shape, or form to hedge their risk. So I wanted to trade these derivative products and learn them kind of from the ground up, as opposed to just selling software that was allocated and associated with them. So I started basically was my own investment management LLC. I've been trading for 2 years now. The first year was incredibly painful, just learning the ins and outs and the basics on how to trade, how to chart, how the derivatives work, how options work, all the different derivatives that I've seen in my career, anywhere from swaps, forwards, NDFs, RFQs, TWAPs, all these good stuff. When you start trading these instruments on your own, it's a completely different ballgame. It has nothing to do with software sales whatsoever. Charting is a completely different animal. So that was a tough experience for me to learn from, basically scouring the internet, reading books, watching YouTube channels, even being on Reddit. You guys want to make fun of that. There are just some really incredibly intelligent people in the community, and if you understand the right people to follow, the right information to get, you can figure out anything on your own at any moment in time. So that has been my journey for the last 2 years. I wanted to post this video specifically to talk about the reverse split on AMC, because I know that's what you guys Demand wise, it's what you care about so much, and what's kind of so exciting and happening in the market right now, especially that the S&P looks to be nearing its most recent high before we make a serious move downward. So let's kind of get started with that. I want to initially talk about integrity as a whole. I have not been 100% accurate. No one on Twitter is, but it's kind of our job to just guide you guys as best as possible. You know, there's nothing on here that I have to do on a day-to-day basis. I don't have to post any charts, things like that. I genuinely want to help you guys understand like these moves that the stock is making, why, how you can predict future ones using different indicators, fibs, volume shelves, volume meters, speed lines, fractals even, because there is something very different and unique happening within the market right now, especially with the meme stock movement. It's something I've personally never seen. It has 2008 vibes written all over it with these shorts that are heavily over leveraged. It reminds me of 2008 with the collateralized debt obligations and synthetic CDOs and being over leveraged, 10 times, 20 times, what seems to be 100 times now. This is serious stuff. So yeah, I just kind of from an integrity standpoint, want to let you guys know that anytime where I see that my position has flipped, if I'm incredibly bullish and then I flip to incredibly bearish, there's a very specific reason why I do that, and there's probably some type of new information that I'm learning. I know you guys are playing around with real money. I'm not a financial advisor whatsoever. You take my advice if you want. But there's a lot of there's professional traders on Twitter that follow me, and there's also single moms in the Midwest that follow me. So it's my role and responsibility to be as professional and truthful that I can to you guys. If I see something that's different, I need to tell you so you're prepared and you understand what to do with your trades. So just to kind of start, I want to go and show you guys my original tweet regarding the reverse split. I posted this December 28th. The reason I posted this and the thesis is pretty straightforward, but it was something that I didn't see anyone else post. I very much was thinking outside the box with this. The reason it led me to come to this thesis was because of what happened with the dividend in August. So this was my original thesis here that, this is the fractal patterning on AMC. I will get to it in 1 second and just kind of explain how that works as well. But at the point where we're supposed to make this large markdown and then a huge markup from 280 to the 30 or 40 or 50 range, I believe that they were going to replace this entire January fractal with the reverse split and completely rob us. Right now, at this moment in time, I have to change my stance on it. I spent all weekend looking at this, countless hours, just trying to figure out from a chart perspective what would make sense and what wouldn't. And I just have to apologize to you guys. I know this is what we've been talking about for a while. This also has to do with my $11 price target, which I now no longer believe is going to be happening, and I'll explain that as well. But the main reason that I am changing my thesis on this is because when the dividend came out and they cut the stock from $36 down to $18, it didn't matter that they cut the stock in two. The patterning on the chart organically fulfilled the repeating fractal in AMC's algorithm. So there is no reason to all of a sudden think that it wouldn't do the exact same to the opposite direction in some way, shape, or form. But the problem is I thought the reverse split was going to fulfill that fractal. But in the back of my mind, I know that when a reverse split happens, it doesn't change the chart. It just changes the numbers and prices on the side. So while you see 258 here, right, it's really going to be 25 here. It doesn't change the pattern of the stock and how it's moving. So I need to say, at this point in time, looking into it further, I firmly believe that Booksy's original thesis of us going down to 320 is correct. So let's put that aside for now. I want to just kind of basically show you guys how the repeating fractal works on AMC's chart, so you can have a general kind of layman's terms understanding. We're not going to get into derivatives, anything like that. You don't need to know derivatives to understand geometrical, mathematical patterns. So let's just quickly let's start with here. So okay, so here is the repeating pattern on AMC's chart. Let me take it on the 4-hour because it's a lot more clear and easy for people to see. Make sure we're on log. Always keep your charts on log scale. It's a lot easier to read the Fibonacci levels. So, okay. So it's basically from here to here. This is the pattern that AMC repeats on every single time frame over and over and over again. It repeats it on the 1 minute, the 3 minute, the 5 minute, the 1 hour, the 3 hour, the 4 hour, the daily, the weekly, the monthly, forever. If you think of it as like you ever see those paintings where it's like somebody's face, and then if you zoom into the painting, it's just smaller versions of that person's face, like making up their nose and their eyes. That's exactly what's going on here. So I want you to look at this, and I want you to memorize this, because every single time you look at the AMC chart, you can see it. You can see it every single day. You can see it on your 5-day chart. You can see it on your daily chart. You zoom into the smaller time frames, and it's there. So 1 hump, 2 hump, fake hump, January, June, 70% sell-off. This is how it happens on the macro, okay? These moves, the January run and the June run, these are big time percentage moves. I mean, you're talking 970%. You're talking 700%. Now, you're not going to see that on every single time frame because they shrink the fractals in what Booksy calls shrinking iterations. So every single time that they shrink the fractal down, and they shrink it, and they shrink it, and they shrink it, it gets to a point where it explodes and it makes its move to the upside, fulfilling the June fractal part of the chart. January and June fractal parts of the chart. So if you see a move and you see, like, visually, you're looking at, say, your phone or a brokerage app on your phone, and you say, oh, there's the January run and then there's the June part, and it's like, why isn't this a 70% sell-off here? And it's much smaller. That's because the fractal's smaller, right? You have to take it on a percentage basis, always. Don't think of it in any other way. So if the fractal pattern is half the size, the retracement's going to be 35%, not 70%. Understand? So now that we kind of get this, and you can see this pattern play out all over. I mean, I'll take another quick example just for you. But like this pattern that you see is all of this over and over again. Like you get it right here. It's like 1 hump, 2 hump, fake hump, Jan, June, 70% sell off, right? It's here. 1 hump, 2 hump, fake hump, Jan, June, 70% sell off. Like 1 hump, 2 hump, fake hump, Jan, June, 70%. Like it doesn't stop, right? It's everywhere. So as long as you guys understand that, things can make a lot more sense because you understand how the computer is creating these mathematical patterns and the geometry that is the like overall repeating pattern that AMC's algorithm creates. So yeah, so that's the first thing I want to go over to give you guys a basic understanding. The first 2 runs that happen, the January and June fractals, those happen because of share offerings. Adam Aaron dilutes the float, okay, which was here, and I think it was here. The custodians of the market, BlackRock and Vanguard, they come in, they buy the shares that just newly hit the market because institutions move the market, not retail, ever, right? They come in, they buy the shares, price shoots up, they take those shares, they allocate them to the securities lending market, which is also known as the repo market and reverse repo market. If you guys don't know what that is, it's basically like the pawn shop of the stock market. You know, a lot of traders and analysis at banks will call it kind of like the guts of the market, because without the repo market, you couldn't get free liquidity transfers between one bank to another. basically banks, they use the repo market to exchange collateral for liquidity on a nightly basis to make sure that their balance sheets and the flow between different asset classes is happening consistently. So they lend those shares out after the price marks up, okay, in that securities lending market. They then collect a fixed income fee for whoever they're lending it out to. In this case, it's hedge funds. So they lend it out. The hedge funds pay them a fixed income fee at this point in time. The hedge funds then take all these shares that they have borrowed and they short it down. Okay? The hedge funds collect their delta, the custodians collect their fixed income fee, and the cycle goes round and round, and then it happens again. And they lend them out, and the hedge funds take it and they short the crap out of it into oblivion. And the hedge funds are making money on the entire way down. Okay? Now, these next runs that happened didn't happen because of share offerings. This one I'm still trying to figure out. I saw a lot of people on Twitter talking about it was like BlackRock exiting their position so they could buy lower. Could have been it. But this one specifically is the conversation that we need to have today. Because this one is the dividend. Okay? AMC splits in two. So Adam Aaron can dilute the stock because the shareholders didn't want to vote for further dilution because everyone thought that dilution stopped squeezes. Little did they know everything I just taught you about the securities lending market. It doesn't stop squeezes; it causes them. But in the long run, and that's just the squeeze in the short term. In the long run, dilution will hurt the end of the bottom end of stocks earnings over time. But back to the dividend. So we're talking about right here. Okay, everyone thought that this was like the next big, like June or January move because it was just gearing up. It constantly made higher lows, and it got to the point where it did the dip, right? The dip right before we run, and everyone's like, "Oh, this is it." I even bought here, and by the time we got here, I was sitting pretty. I was up big money. But the problem is, I know the fractal patterning repeats. And it doesn't change for anybody. The computer does not make mistakes. Ever. Does not make mistakes. So let me just kind of show you what my mindset was at this point in time. I'm going to take the bars patterning here. Because this is basically where we were. Right? You had your June run, your 70% sell-off. And then we start the next point, the next portion of the fractal. So we're like here. At this point, right? And I'm sitting on my couch like, oh, this makes sense. Right? Like, we're at the point where I know that this has to come next. Right? But I don't understand how we get there. Because here's the pattern. Here's the next part of the pattern. Right? Pattern does not deviate. It repeats on every time frame, including the macro, which is what we're currently looking at. Right? This is the second part of the pattern. So we're all sitting here and everyone's expecting it to blast off. And I'm sitting here like, no. Like the pattern has to retrace here. So I took profit here. Not full profit because I actually did want to see if it ran. But I did take like 50% profit here. But I didn't understand how this was going to happen. It just didn't make any sense. Lo and behold, August 22nd, dividend comes out. And they slap it down 70%. And every time the stock squeezes, and it squeezes, it breaks the 200 EMA. 200's in red. Breaks the 200, 70%. Breaks the 200, 70%. Right? And I'm looking at on the 4 hour here. So again, breaks the 200, and you can expect 70% from here as well. But I'll get to that in a second. Where'd my thing go? Every single time the stock squeezes, I know the 70% retracement is going to happen. But how does it get there? Is it by organic means? Or do they pull some corrupt, fraudulent, nonsense loophole crap to make it get there? So that's what happened here. So the stock is sitting at 36 at this point in time. The chart's different now. 36 divided by 2, ladies and gentlemen, is 18. Okay? 36 70% down from 36, I believe is 10 and a half. And then they cut it into 18. They go 70% down from there. You get your 5 and a quarter. 5 and a quarter. Make sense? So the fractal patterning completes. They come out with the dividend. The pattern completes. So we now know factually that they can use other means to complete the fractal patterning. They can, like at 36, there was no reason from a news perspective why we would have a 70% retracement from that point. The stock was on fire, right? During these fractal pattern movements, and I'll come back here so you guys can see. This is straightforward, right? Good news is released here. Bad news is released here. Good news is released here. Bad news is released here. Good news is released here. Bad news is, like, it's a joke. It's a joke. Adam Aron knows this is happening. He is on board with whoever is controlling the algorithm, which is most likely BlackRock and Vanguard. The question is, who is pulling the strings from up top? Who is controlling BlackRock and Vanguard to make this pattern repeat? And this is the part that's going to frighten you, okay? And this is why I can't sleep at night. Because the pattern never deviates. So whatever the news is at these moments in time, most likely don't have to come from just AMC as a whole. Because AMC, after June 2021, after this move, AMC has been following the S&P. So let's talk next about the correlation between the S&P, okay? So let me show you what I mean by that. I'm going to put SPY on here. Here's SPY. Here's SPY. So you guys can get it. Let me just move these fractals. They're all over the place. Okay. Here's SPY. Here's the descending trend that we have been trapped in. Obviously, it's a little smaller. Just look at it and make sense of it so you guys can understand. AMC runs. SPY runs. AMC runs. SPY peaks at the top of the trend. AMC runs. SPY peaks at the top of the trend. AMC runs. SPY peaks at the top of the trend. AMC runs. SPY peaks. Breaks the trend. My original thesis, we were going to fake a bull run and then capitulate, okay? That's exactly what we're doing right now. I'll leave the conspiracy rabbit hole up to you guys, but if there is any pattern in the entire stock market that's repeating, this price action is not organic. And if the pattern is running in tandem, algorithm-wise, with the S&P 500 and news events are coming out regarding the S&P 500 that justify the pattern in AMC's trading movement, I don't need to say what it is, but I think you guys understand my point. There's something going on here way, way above our heads. So to give you a little education, that I've been working 11 years in finance and I've seen some screwed up crap going on with, you know, I don't want to get into insider trading and stuff like that, the things that I've personally seen. This whole thing is rigged. There should never, never be any type of pattern playing out like this with this amount of accuracy. I mean, if you want to look at trading with emotions and his quad witching analysis, go take a look at that. I mean, the stock is making moves in 95-day and 145-day cycles. Again, you don't need to be like a rocket scientist to figure this out. Let me just kind of show you what I mean. I'll pull it up here real quick. Like, I think they have the white. The white is 95-day. The green is 145-day. Like, taking this all the way back from when the algo really started to expose itself because the moves were more extreme. Like, you can't really tell back here. Like, you can tell, but it's just a lot. They're a lot smaller. So no one could really see it until it, like, really broke out in price action. But, like, 95-day, right? And then in between this and the next move, 95-day. And then you get the 145 in between the major squeeze tops. 145, January. 145, June. Like, 145 in between March and August. 90-day in between the end of the 70% retracement. There's your 90-day cycle. And then you get another 90-day in between here and the next top. like, what's going on here? You know, let's go back to my original chart that I've been posting for over a month now. Again, apologies, guys. The reason I had this flipping bullish and going to 11 was pretty straightforward. It's one, the timing of the cycles, right? So I know if we're in 95 and 145 day cycles, here's your 90 day, right? Where does the 90 day cycle end up? From the peak of this move right into the convergence state. It's not a coincidence, okay? The computer doesn't make mistakes. Okay, so I had the original thesis that we were going to continue to move bullish on the S&P all the way up to 430, maybe even 440. Because once you get past that 430 range and you're into that like supply level that's up there, the market has to basically flip bullish from there. And that's not what they want. They want the market to sell off here. Like, I don't know if you guys are following what Powell's doing, and now they're talking about like the 50 BPS hikes coming throughout the entire summer. If on March 22nd, which is FOMC, he says we're raising 50 BPS, you can expect that sell-off to come, right? Interest rate hikes kill equities. They kill equities. So, yeah, we're just kind of in a position right now where I thought the fake out was going to be a little bit higher and you were going to get that organic kind of price action. But the more that I looked at it over the weekend, the more I had my reserves. Okay, so if we know where we are in the repeating fractal at this moment in time, every single technical analysis guy that I follow, they're all seeing indicators that we are running the January fractal. It's the percentage, it's the MACD, it's the threshold list, it's the short interest, like the cost to borrow skyrocketing. All of these things are just like valid repeating reasons. Every time we're about to run, the same thing happens over and over again. Because while so many things in the stock market can be rigged, they can't rig all of it. You know what I mean? Like there are indications and indicators like that will show you that we are about to make one of these big moves. But there's just kind of a problem here. There's a problem here with the way that I had it. And I was trying too hard to think outside the box. I was thinking about the dividend so aggressively every single night in and out and thinking that they were going to complete this January movement and just replace it with the reverse split. But it can't happen that way, right? The prices will change on the right-hand side. So as opposed to, like we talked about before, when you get down here, you're at, whatever, 320, you're now at 32 during the reverse split. But the pattern has to stay the same in the chart, just like it did with the dividend. They split it in two here from 36 to 18, right? And the pattern fulfilled. It didn't matter that it was cut in two. The pattern on the chart still fulfilled. So it has to continue to fulfill to the upside. You can't just take the reverse split and like it's not going to go. You know, I was talking to Ashley this weekend, and she made a very valid point. She's like, it's not going to just be a straight line up. Like you're not going to see this, and you're not going to see this price action. It just like go like this and reverse split, and now we're at 48. Like, and then there's going to be a gigantic green line here. It's not going to happen like that. So this price is going to change, but the chart will not change, and that's the most important thing that you guys have to understand. I was thinking too kind of out of the box, and it was just more straightforward. This is actually the placement. And if you extend it, because you got to understand that this fractal, remember what I said about the picture of someone's face with smaller versions of the picture, it does that to the opposite direction as well. So if we're looking at this part right here, I just want to show you guys, so this is very clear. This portion right here, it's a head and shoulders. AMC consistently makes head and shoulders over and over again. That's how they keep getting it to lower lows in this macro distribution that we've been in for the past 2 years since the 72 run. This portion right here is this head and shoulders right here. So if you just extend it so you can see, and this is why fractals are very dangerous, you can't just really copy and paste them and expect it to fulfill certain ranges. I've seen a lot of people kind of do that and get blown out. But this is this. It's just a lot bigger. There you go. Make sense? You get it right here. Okay? So this has to happen. This is coming. This is going to be the S&P crashing to 340, 335 by June 1st. I've also been saying repeatedly over the last 2 months that by the 4th of July, we will bottom. At this rate, it's going to be sped up by 1 month. So like basically June 1st to be the bottom of the stock market. And then we'll rally into the 4th of July and AMC will fulfill its January fractal pattern. So you are going to get this and it will be organic, which is good news. But that run to 11 is no longer going to happen. It's no longer going to happen. Let's talk really quickly. So you guys, I want to talk to you guys really quickly about that run to 11 so you understand. So let's talk really quickly about the run to 11 on top of the cycling that we talked about before. From a fib perspective, let's get rid of this. The 1161 is on the macro all the way from 2015. So you guys can understand these are the most important Fibonacci levels for this stock's algorithmic movement. 1161. And that was the price target. Now, we will eventually touch that 1161. It's going to happen probably it could happen by November, it could happen by January of next year. That's coming. But we're still way too early. We're still too early. And I thought they were going to have some type of fake out here because the fibs lined up, the trajectory, the kind of extended fractal, the options chain, the max pain, it all lines up for a move to 11. The problem with the option chain and the max pain is, and just so you guys know, it's the strike price with like the most open contracts, calls and puts, that if it closes there by expiration, it's going to basically cause the most losses for people on both ends. The guys writing the calls, though, the market makers, are going to make the most money. So they want it to close at max pain, and that's how you consistently see on AMC's chain every single Friday, whatever max pain is, say it's 450, 550, we always somehow get to that number. Like it's shorted down to that number. So the market makers make maximum money. Like it's basically Christmas for them every single Friday because you guys are not buying options that are a month and a half out and that are in the money and that don't decay via theta, and you guys are you're handing them like free dollars. Like they want you to buy weeklies, right? They gyrate this price action consistently to fake you out, to create that FOMO. So you say, oh, it's going to run by this Friday, let me buy weeklies, and you buy a contract or two. And that pisses me off. That really pisses me off. Because if you guys like had the right tools to become more educated traders and understand how the system like worked on a fundamental basis, you would be able to cap your losses and you'd be just more efficient with risk management and everything around trading. And that's what we want. Like that's what I want for you guys in the future. So yeah, so to go back to it as well, the option chain for March 17th is completely loaded with AMC calls. Astro also pointed out to me that the short sellers looks like they moved all their premiums to that level on March 17th. To me, from like a common sense standpoint, if you didn't kind of know anything, you'd be like, oh, well, the chain's loaded to March 17th to, that $10, $11 range, and short sellers are moving their premiums to that range as well. It kind of makes sense that that's where the price would go because then they could push it down from there. But it's all a trap. Okay, max pain, the option chain, both of those are completely rigged. How many times have you seen an option chain look to be gamma loaded for a specific strike price 1 week and it absolutely not go there? Like, do I have to even bring up the January 145 calls that you guys were saying go, not you guys specifically on my stream, but other people on Twitter were saying, oh, we're going to the moon, like shorts have to cover. Like, you guys have to have just a lot of more common sense than that and understand that all of this stuff is like very manipulated. We see it going on. We see the bait on the options chain. We see the bait on the max pain numbers, and they're doing it again. And they have it here to $11, expecting everyone to think that we're going to squeeze here. You know, all the January fractal indicators are looking primed to explode, and that's why everyone on Twitter is looking at it like, oh, we're about to make our next big move, as long as SPY continues. However, the timing is impeccable. Like I showed you guys before, how SPY matches with the levels every single time SPY peaks and taps that downtrend, AMC makes its move. The timing is there specifically so they capitulate SPY and they crash it to stop any type of squeeze move from happening. So you are going to see that 320 range, most likely by convergence. And let's talk about that quick. We are here. It's more mirroring this fractal as opposed to the one before it. Now, don't get it twisted. This is also this, but the head and shoulders move on here is a lot more exaggerated than on this one. On this one, it looks more horizontal, right? On this one, like, you can see it. It's just like, and they exaggerate this one as a UTAD. But in this one, it's more traditional. Left is lower than the center, which is going to be lower than the right. And we make our move down to 320 into the convergence date, which is March 14th. March 14th. Okay, so what does this mean for Ape? Well, Ape is in the process of making a big move, right? I had to alter this chart. I know I had this going up to like here, right into the golden pocket on the macro, but remember, you can find fibs for anything. You can basically find a 618 pocket to justify almost every move, because every peak or every valley always has a fib that it's going to bounce off of. This is where we're going to end, and you can see there's the top of the volume shelf right here, which coordinates with it perfectly. And if you want to take the fib levels to find where the 618 is from here to here, right? That's where you get your 320. So this is March 14th, and it's from this point in time that the reverse split takes place. So if we're at 320 on Ape and 320 on AMC, you get your 640 target. They reverse split from there, which is your $64 ultimate price target. I don't know exactly when they're going to do the reverse split. It could occur on the 14th. Most likely, I would think it would happen, I don't know, maybe 2 weeks after that at the most. Again, thesis-wise, they want to reverse split it and then use the S&P crash to stop any type of squeeze movement happening from there. Then they get their 280 price target by dropping the S&P and taking AMC down with it. But the prices are going to be different. Obviously, if you're at a $64 level and they take it down, that whatever percentage is left from that point, I think it's 20%. Because if you go right now from AMC from 625, which we're going to get this week leading into earnings, and that's how they justify that news-wise, you take it down from there, 625 shelf, all the way down to 320. I think that's like 50%, just off the top of my head, whatever. And they still have another 20% to go after that, after the reverse split happens. So if we're at, you know, $64 after the reverse split, you take your 20% from there, and that's where the bottom will be. So, you know, I'm looking at like something like $35 price target at the absolute low by June 1st. Once we get to this point, that is going to be it, okay? The S&P goes back to all-time highs from there. It takes AMC completely out of distribution, and now you're forming the accumulation schematic on the 2-year macro chart. SPY will go back to all-time highs. AMC will run all the way to summer 2024, which you'll get your MOAS type squeeze, which won't be a MOAS type squeeze, but from a narrative perspective, that's how they're going to spin it on CNBC. The original price target we had on that was like $110 to $230. So if you're now at a reverse split and the price you're starting at is $30, it's going to be much higher than $100. I mean, you might even see above 500, and that is where they get you on the narrative. They make it appear like the MOAS actually happened, when in actuality there was just a reverse split and the prices are higher, but the value of the underlying asset, which is AMC's equity, common stock, has not changed. okay? It's complete misdirection, as usual. This is how the stock market works, ladies and gentlemen. I appreciate your guys' time. I'm going to cut it for now. I think we're at like 40 minutes. If you have any questions, post them. I'll be more than happy to talk about it. I will also come this week with more updated charts on where we're going to be moving over the next 3 weeks leading into the convergence date. That $11 price target chart that I have been posting over the last month, I'm going to have to change that just so you guys can see it. I don't have it here right now. I'm going to have to change that so you guys can see how I have it altered for a more bearish movement. With the S&P, could we move up a little bit more? Maybe to the 420, even 425 range. It's possible in the next 2 weeks, but just complete honesty, after everything I've looked at in the last week, I think we're going to flip bearish here, and we're going to see that 340 level on SPY by June 1st. So that's it, guys. Appreciate your time. Thank you for everything. Got any questions? Fire away.